All right, welcome to your pre-licensing class. Super duper excited about each and every one of y'all being over on here. I am Regional Vice President, Coach Shay Bunn, and we are going to be walking you through how to complete your chapters. And so what we're going to be doing today is we're going to be going through chapter 1 so that you all will know not just the content, because we will be going over the content, but also this is going to be your opportunity to learn the strategy, okay, on how to pass the class, okay? And the same strategy that we're going to teach you on how to pass the class, once you get done with the class and watch the full practice test video, you will see the same strategy used in order to pass the full practice test, which is also an indicator, okay, that is what you would need to do to practice or to pass the actual test. Guys, what I'm going to tell you right now is don't come in here trying to do it your own way, okay? The way that we're going to be teaching you today is a full system, okay, that we know, because the licensing specialists and I are some of the top licensing specialists in the states, okay, guys? And so you want to make sure that you follow. I mean, it's time tested and approved, okay? That if you follow this system, you will pass the class, you will pass with confidence, and you will pass the test. Okay, guys? And so follow the full instructions. At the end of our section of going through this chapter, we're going to put you in a breakout room, okay, so that you can complete the quiz on your own. And after you complete your quiz, you're going to take a screenshot of your score, whether you passed or not, and you're going to put it into the Telegram group. And so, okay, guys, we're going to go ahead and get started with showing you how to actually pass this class. Hopefully you all are ready. Take out your notes. Okay, guys. All right. Question number 1. What is the time frame for filling relevant suspicious activity reports? Another way that you will see that is SAR. Okay. Suspicious activity reports. Well, you'll also see that on the test as SAR. Okay. And so you have all these different options. You got within 90 days of initial discovery, within 90 days of the suspicious activity. You have within 30 days of the suspicious transaction, okay? And you have within 30 days of initial discovery. And so as you all can see, you have two answers, A and B, that are similar because they mention 90 days, and C and D, which look similar because they state 30 days. But between those 4 answer choices, 2 of those talk about initial discovery, and 2 talk about suspicious transactions. And so what we are, one of the things that you have the ability to do here, as you can see on the tail end of the question, you actually have the ability, if you do process of elimination, you have the ability to cross out an answer that you know does not fit. Okay, guys? And so we're just going to select, an answer. Okay. Once you select an answer, guys, you're going to press the word submit. All right. And so we got this particular question incorrect, right? It said, see right here, y'all see relevant SAR, just like I said, it would be suspicious activity reports. Now, in the process of you taking a quiz, if you have your notebook paper and pen out, one of the things that you definitely have the ability to do is take your pen and paper and write down the word SAR, suspicious activity report, right? Write down chapter 1, right, at the top as the title, and then write down the word SAR, suspicious activity reports, and then you can write down suspicious activity, or you could put down, days, time frame. You can write down the word time frame. I'm gonna say that. Write down the word time frame. So that way, when you go back to the chapter, because here's the thing, each one of these questions lets you know exactly what's going to be on the test. See, if you go and read all the chapters first, if you go read the whole chapter first, everything seems like it's going to be on the test, right? The questions actually tell you what to study. This is the reason why we go through the questions first, okay? And so what you're going to do is at the bottom, it's an explanation. Relevant SAR reports must be filed, okay, within 30 days of initial discovery of a suspicious transaction. Okay. So the correct answer is D. It's going to be within 30 days of initial discovery of a suspicious transaction. Not 30 days of a suspicious transaction, because the thing is, we have to discover that we gotta see that it's actually suspicious. A person may do something like they might deposit a large check or something like that, today, and it might not, in the bank, and it may not even be seen until, Thursday, Wednesday or Thursday. So the transaction was today, the discovery may not be until Thursday, right? So it's going to be 30 days, which is going to be immediately. Everything in this business is going to be, and in this industry is going to be urgent. Remember that it's going to be urgent. Everything needs to be done urgent. So it's going to be the shortest amount of time on this question. Okay. That's a way for you to remember the answer to this question, 30 days of initial discovery. So what I want you all to do right now is screenshot this question. Let me give you the time to go ahead and screenshot the question. Why are you screenshotting the question? Because you're going to use this as study material. So instead of you having to go and read the entire chapter, you're going to screenshot the questions so that you can know how to answer the question, right? You're going to know how you're going to be able to, and you're going to know the content that's actually going to be going on the test. So you'll know what to study, okay? And you'll understand, because the biggest thing that you need to be worried about is how the questions are worded, okay? So the thing you're looking for here is the time frame for actually filing an SAR. Next question. Contracts that are prepared by one party and submitted to the other party on a take it or leave it basis are classified as. So we're looking at contracts, okay, which all of these words have the word contract in it, okay? Then it says prepared by one party and submitted to the other party on a take it or leave it basis, which basically means you either gonna take it or you're not gonna take it. Either you want it or you don't want it. It's non-negotiable. So these are some words you can write down for this particular question. Non-negotiable, take it or leave it. You pretty much stuck with it if you're gonna get it, but we're not gonna negotiate this thing, okay? It is what it is, right? And so let's look at the answer choices. And so the people that I have on here today, I want to teach y'all a strategy, and y'all are able to come off mute and let me know if you can answer the question. But here's the keywords. I want you also to look at keywords in the question. It says contracts that are prepared by one party, right? Meaning it's a one-sided contract. Do you all see a word? Now, y'all may not even know the definitions of the actual words in the question, but do y'all see any word in this question where part of the word means one or part of the word means sided? I have two ladies on the call right now. So you have
I see one.
Okay, which one do you see?
D.
Okay, unilateral. Okay, anybody else see anything different?
No, that's what I was gonna say too.
Okay, and you've never seen these words before or the question or anything. Okay, and so and let's just say you went through okay, let's say you went through to answer these questions, right? So let's say you knew the word aleatory. You're like, okay, no, I know that's not it. All right. Then you see, it's not binding contracts because that's not an actual word. But here is a clue, right? So now I'm going to tell y'all something. They actually tricked you all in this question. They tricked you all in this
Really?
question. They did. Okay.
I was thinking adhesion, but anyway, go ahead.
Hold on.
Because
So they tricked you in this question. Okay. This is the reason why you want to read all answer choices. Because yes, even though there is a strategy that I teach okay, that teaches you about looking for keywords. You also got to, sometimes you got to use more than one strategy in the question. Okay, so one strategy we're using is process of elimination. So we just eliminated those two. Another strategy is looking at keywords, right? So it says prepared by one party and submitted to the other party. Okay, so the word one means uni, but here's the thing, guys. The keywords right here were
Was
take it
take it
or
or leave
leave
it.
it.
So it's stuck.
Right. So it's stuck, right? And when I look at the word adhesion,
You
I think
sticking
about the
something to
word,
stuff.
right. I think about the word adhesive,
Yeah.
right? Means glue, which means stuck, right? And so,
Mm-hmm.
so if you had to choose between these two, then I'm like, okay, even though uni means one, but right here, they're really talking about take it or leave it. So, okay, I'm across this one. All right, let's try this one, okay? And that is correct. So you got to sometimes
Mm-hmm.
use more than one strategy, right? When you are going through and you have to read every answer choice, right? Because, and I'm gonna tell y'all because I know how to take these quizzes without reading the whole question. But one of the things I realized one time was that I was so used to going through the questions and just pulling out certain keywords that I didn't read all the answer choices and I didn't even pay attention to other main keywords in the, because usually the keywords that you need to look at are towards the end of the question, right? And so it's a contract of adhesion, right? Meaning you stuck with it. It's take it or leave it. It's non-negotiable. Either you want it or you don't want it, right? And so go ahead and screenshot this, you guys. And so good job, good job. Insurance policies are written by the insurer and submitted to the insured on a take it or leave it basis. The insured does not have any input in the contract, but simply adheres to the contract, right? What they mean by that is, let's just say I give somebody a quote for life insurance, 100,000, and it's gonna cost them $80 a month, right? They can't be like, oh man, Shay, let me get that thing for $40. What? Can't negotiate. Now, if you want $40, I can take the coverage amount down, right? I can take that coverage amount down to an amount that costs $40, but I can't give you 100,000. This we ain't selling burgers and fries, okay? And so it's gonna be based off of the company. All right, let's go to the next question. All of the following would be considered an insurance transaction, right? Now, here's what I want. I love this question. All of the following except. So that means that all of these apply and one does not. And the one that does not is the answer. So again, you want to be able to fully read the question and understand what it's asking before you try to answer the question, because you might see, an insurance transaction and be like, oh, this is it right here. And then you select it and be like, oh, it said except, right? So 3 of these are an insurance transaction and 1 is not. Now, based off of what we just talked about in the previous question, you could do 2 different strategies here. You do process of elimination of all the ones that are insurance contracts. And you can also just just like I said, read through and know like one of these really sticks out as not an insurance transaction, right? And so let's go through it. Obtaining an insurance license. And also you can look at the verbs, right? Obtaining, soliciting, advising, negotiating. Straight up off of the verbs, which one you know is not a transaction, an insurance contract? Okay, you said obtain an insurance license. Okay. Can you think of anything else? Obtaining, soliciting, advising,
Well,
negotiating.
soliciting. Well, if you're soliciting a policy, I don't know.
Yeah,
Them two is
that's selling one.
they're selling it. Yeah. So, but in order to do that, you have to have your insurance license. But if you don't have your insurance license, you can't write a contract. I mean, a
Well, we're talking
transaction.
about people who actually got their license at this point.
Yeah. So obtaining one is not a insurance transaction.
All right, let's select that answer.
I'm guessing. Okay.
Good job. Now, here's what I wanted you to
Yes.
do. I wanted you to go, I also wanted you to go through and make sure that you read all the other ones, right? Because
I did.
here's
I
what
read
you can,
them to myself,
okay,
but
good. Okay. And so here's the thing, negotiating, you can negotiate coverage. You can't
mm-hmm,
negotiate, you can't negotiate trying to change the price of the coverage. Okay. So you can even negotiate a price based off of the, you know what I'm saying? You could say, okay, well, I only want to pay 40. Well, then I'm gonna give you a quote for an amount that costs 40, but I can't ask for, I can't change what the coverage actually costs. So you can negotiate your coverage, right? And say, well, no, I don't want 100,000, I want 300. I want 500, I want 1,000,000. All right. So I want y'all to understand the difference in those two. An insurance transaction means, and I want y'all to go ahead and screenshot this, that it means the carrying on of business and insurance, which could include the solicitation of a policy, advising negotiation, or inducement related to coverage or claims. Obtaining an insurance license is a prerequisite for transacting insurance, right? So you have to know that this is stuff that's happening after. All the following would be considered an insurance transaction, except all of these happen after you get the license, okay? So good job,
mm-hmm.
hope y'all, let's keep it going. Which of the following best details the underwriting process for life insurance, okay? So you got A, selection, classification, and rating of risk. B, reporting and rejection of risk. C, solicitation, negotiation, and sale of policies. D, issuance of policies, okay? And so this is asking for the underwriting process. So the steps of underwriting. Which one do y'all think, based off of the strategies that I've taught y'all? And this one says best details. So some of these actually happen during the underwriting process, but is not the entire process. So some of them you will be able to eliminate.
Mm-hmm.
So I'm gonna select the answer.
Is it A?
Okay, you choose A. What about you,
I
Laura?
think it's C.
All right, so that means y'all eliminating B and D. Okay, so why did you choose A?
I really don't know.
Okay, Laura, why did you choose C?
Well, because you're soliciting, you're trying to write a policy, and then you're negotiating just in case they say, well, because of blah 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 blah, we can give her this at that rate. And then to sell it is if they agree to it, then you actually sold the policy. They have insurance. So with underwriting, even I think I took it back to when you buy a house where the offer is this, that, and they're going to pay this, that. You got to come up with this, that. But if you don't have this, that, they can do this, that, and then all of this paperwork and redoing it and blah, blah, blah. Then you come up, you got your house. So that's what I took it as. So I don't know.
Okay. Now, underwriting occurs. When does underwriting occur?
After it's
At
wrote
the
up,
end of the process.
Say that again. After
it's wrote up.
the policy is done. You just named all the things that happen before the policy is done.
Okay.
We're gonna go with A. Because C,
Okay.
it says which of the following best details the underwriting process. So this happens after the policy is done, right? Underwriting happens after, like you just said it happens after so yeah, you you're going to solicit first, right? You're going to get people to want the policy, going to negotiate or whatever of the coverage, right? And then you're going to actually sell the policy. You're going to do the policy application. Okay. Now, once you submit the policy application, then it goes through the selection, classification, and rating of the risk of the client, right? So this is the actual underwriting, because this is where you find out if the person is issued, or if they declined, or if their policy is rated, meaning they may have some medical issues, but it wasn't bad enough for, and I want y'all to remember what I'm saying. When a person is issued, that means they're in good health or good enough health for the policy to be issued, okay, at a standard or preferred rate, right? Remember what I'm saying, standard meaning it's good, right? It's not the best, but it's good. Preferred meaning they have the best health, right? And that also means the company is going to give you a discount on your monthly premium amount if you are in the best health, right? Remember what I'm saying, okay? Because this will be on the test, okay? And then if you're rated, meaning it's going to be higher based off of what your medical conditions are, okay? And so that means that it's going to, that you are going to pay a higher premium due to your health condition or background history or whatever the case may be. And then, of course, you got declined, meaning that, oh, no, you too big of a risk. Like, we might end up paying this out too soon, okay? You might die real quick, okay? So that is that. So go ahead and screenshot this page. Now, what I'm going to do is I'm going to go ahead and go through the rest of these questions. And so because you all will have access to the to go back and look at this video, you all will be able to see the questions and answers, okay, that I actually chose. Some going to be right, some going to be wrong, okay, but you will be able to see the answer choices and the what do you call it? The explanation, okay? And you'll be able to go back and watch this as many times as you need to, right? But it's time for us to get y'all in the breakout room to actually go through this on your own using these strategies. So I'm going to go through these questions. And so, all right. And so if an insurance company wishes to order a consumer report on an applicant to assist in the underwriting process, and if a notice of insurance information practices has been provided, the report may contain all of the following information except the applicant's ancestry, prior insurance, credit history, habits, okay? And so we're going to select ancestry, and that is correct because they are not going to look up your ancestors, y'all. They're not going to look up your ancestors, okay, in for life insurance, okay? They want to know what's going on now. So you'll go through, you'll screenshot all of this. This particular page looks like you might have to take 2 different screenshots to get all the answer. Okay. On a participating insurance policy issued by a mutual insurance company, okay, dividends paid to policyholders are. Now, let me pause right here. On that previous question, when you go back and take notes, okay, after you've done your screenshots and all that stuff, then you will actually, on your paper notes, you can write down the following information is collected for consumer credit reporting or consumer reporting, right? And you will put the 3 that are the correct answer, and then you'll say, and on the other side, you will put not, and you'll put the one that's not, which is ancestry. Because again, they're going to ask you that question again, but it's going to be worded differently, okay? So on a participating insurance policy issued by a mutual insurance company, dividends paid to policyholders are paid at a fixed rate every year, taxable as ordinary income, not taxable since the IRS treats them as a return of a portion of the premium paid and guaranteed, okay? And so now here's a few strategies you need to know about this. Number 1, sometimes the longest answer choice is the answer, okay? Number 2, here's what you need to know about dividends. Dividends are not guaranteed, okay? Always remember that. Dividends are just the overpayment of premium on cash value policies, right? And so they're not guaranteed. You may not even pay an overage on a cash value policy. Okay. Now, if you with Primerica, you should not be having a cash value policy. Okay. I'm just going to put that out there. Okay. But some of your clients will, and they will think there are insurance agents that will tell them, oh, you get dividend checks every year. And they're telling them it's guaranteed, and it's not guaranteed. I actually had this to happen to one of my clients. The insurance agent kept saying it. And I was like, please show me in the policy where it says it's guaranteed, because it's not. Okay. They are not paid at a fixed rate every year, because if it is, that means it's guaranteed, right? And they're not taxable as ordinary income, because your dividend check is a refund of overpaid premium. So a refund is not earned income. Okay. So it's not taxed. All right. An insurance contract requires that both the insured and the insurer, okay? So the insured is the client, the insurer is the insurance company, okay? So if you want to put yourself, because that's how I pass the test, I will put myself and other people in the question, okay? So an insurance contract requires that both me and Primerica meet certain conditions in order for the contract to be enforceable, or to be enforced, issued, placed, whatever you want to call it. What contract characteristic does this describe? Conditional, contingent, aleatory, unilateral. One thing I will tell y'all is that y'all will see these words numerous times in numerous questions. So you do want to go and look up what all of these words mean in the chapter, okay? And they have all the terminology at the beginning of the chapter. And if you do best by writing down the definition, do that as well, okay? And so let's just say it's conditional, all right? So it's a conditional contract, right? Because it says both the insured and insured meet certain conditions, okay? Certain conditions in order for the contract to be enforceable. Sometimes the questions tell you the exact answer, okay? Representations are written or oral statements made by the applicant that are found to be false after further investigation, considered true to the best of the applicant's knowledge, immaterial to the actual acceptability of the insurance contract, or guaranteed to be true. So 2 of the answer choices are similar, okay? So we could cross out this one and this one. These 2 are similar. This one is considered to true to the best of the applicant's knowledge, and this was guaranteed to be true, okay? So let's try representations being considered true, right? And so if it's guaranteed to be true, it's called a warranty, okay? You definitely need to know that. So your name, your birth date, those are guaranteed to be true. Like, that's your name and your birthday, right? That's your actual name, that's your actual birthday. But your height and weight, may not be right on the money, right? So that is a representation of you, your height and weight, okay? Considered to be true to the best of applicants. Now, you might have lost weight since last time you stepped on the scale. So misrepresentation, okay, is, you basically lied about yourself, okay? You 300 pounds, but you told us, because we can only see your neck up on the Zoom screen, that you 150 pounds, okay? You lied. That's a misrepresentation. All right? Because an insurance policy is a legal contract, it must conform to the state laws governing contracts, which require all of the following elements except legal purpose, conditions, consideration, offer, and acceptance, okay? So 3 of these are true to this question, and 1 is false, right? It says all these except, so that means the one that is the leave out is going to be the correct answer, okay? Insurance policy is a legal contract, okay? So let's just select conditions. Correct. You need legal purpose for the policy. You need consideration, which consideration means that the client has consideration for the policy by paying the premium, okay? And the company has consideration for the policy by agreeing to pay the death benefit when you die, if you keep paying your premium. So that's the consideration. And then, of course, you have to have offer and acceptance, right? Your application to the company is your offer, and them saying, yes, your policy is issued is the acceptance, okay, of your application. Which of the following best describes the concept that the insured pays a small amount of premium for a large amount of risk on the part of the insurance company? So we know it's not adhesion because adhesion is take it or leave it basis, non-negotiable, okay? Warranty is this information is a representation. It means it's exactly true. Subrogation, I don't even know what that word means. I would have automatically eliminated that out because I ain't never seen it, okay? I'm pretty sure if I Google it, I'll figure it out. But I know that aleatory means that you're paying a small amount of premium for a large amount of face amount. Okay, so you could easily pay for your life insurance policy today, and it's something that y'all need to know that a client could pay their premium today and die today. And if the policy was going to be issued, their family will receive the death benefit. So there's no waiting period. Only time where you might see that happen is if the client, has to take a medical exam, or they do it as a COD, meaning they submitted it without payment. And if they die and no payment was received, they would not get the life insurance. A payment has to be received, even if the person ends up being declined. We don't know that they were going to be declined. In order for them to have conditional coverage, the payment has to be received. If they get declined, the company will refund them, right? And then we can always do a, request of reconsideration. That's a whole nother subject, but, this is aleatory. Boom. You can go and screenshot this and move it along. If an applicant for a life insurance policy is found to be a substandard risk, remember we talked about risk, the insurance company is most likely to charge a higher premium, refuse to issue the policy, require a yearly medical examination, lower its insurability standards. So remember I told y'all, standard is going to be like everybody else. Preferred is going to be a discounted rate. And substandard, which is rated, okay, is going to be a higher premium rate, okay? And decline, you just gonna get your money back because you declined, okay? So the premium rate will be adjusted to reflect the insurer's increased risk. A participating insurance policy may do which of the following: pay dividends to the stockholder, pay dividends to the policy owner, require 80% participation, provide group coverage. Okay, a participating insurance policy may do which of the following? So we're going to pick an answer. Ta-da. And so this answer choice was based off of 2 of these answers look alike, 2 of them don't. So process of elimination, I'm going to eliminate the ones that don't look alike, and I'm going to pick from the 2. Well, if it's a participating insurance policy, that means that it is by the policy owner. Stockholders ain't got nothing to do with life insurance. That's got something to do with investments, okay? So that was a dead giveaway, right? These 2 look alike. These 2 don't. Delete those. And then, okay, this one talks about a stockholder, and this talks about a policy owner. Okay, we're going to choose the one that's talking about a policy owner, okay? An investor buys a life policy on an elderly person in order to sell it for a settlement. This is an example of third-party ownership, a prearranged funeral plan, a STOLI, a viatical settlement, okay? If you don't know what STOLI is, then you will write that down in the vocabulary that you need to learn, and you will be able to go back into the chapter and look it up because it will be questions on the test about a STOLI policy. So an investor buys a life insurance policy on an elderly person in order to sell it for a life settlement, okay? So let's try viatical, all right? And so it ended up being a stranger-originated life insurance policy, which is STOLI, are usually purchased by people who have no relationship with the insured with the intention of selling them for life settlements, okay? And so this is an example of, even though the word settlement is in the question, does not mean that it will be in the answer choice, okay? And so third-party ownership has nothing to do with settlement options. Okay, I mean, with settlement, I'm sorry, not settlement option, but settlement, a pre-arranged funeral plan. I mean, that's just a policy, okay? And third-party ownership, meaning somebody else just got a policy on you, okay? Stoli, is, again, somebody who's purchasing a policy for another person. And then viatical settlement is about the illness that a person has, and they're trying to sell their policy, okay, so that they can, you know, because they can no longer afford it, or it might be different reasons, but that is that. But you will need to learn about viatical because it will be on the test. Okay, the MIB, which does not mean Men in Black, okay, it's the Medical Information Bureau, all right, was created to protect insurance companies from adverse selection by high-risk persons, insureds from unreasonable underwriting requirements by the insurance companies, insurance departments from lawsuits by policy owners, and medical examiners that perform insurance physical examinations. Y'all, I'm gonna tell y'all, the MIB is kind of like a fraternity, okay? It's all the insurance companies, even though these insurance companies are different companies, they got each other back. And they don't want a person to come over here and apply for insurance and then, you know, get declined, and then they go to another company and lie on the application. Well, they keep that, if once you decline with one company, all other insurance companies will be able to see that you were declined, okay? And so this is the reason why when I have a client who gets declined, I go through the reconsideration process, because I know it may be difficult for them to get insurance with another company, okay? Just because they will see it. They will see that they got declined and the reasons why. So they may automatically decline the person because of, you know, they got declined, you know? So so the MIB does not protect the client, it protects the insurance company, okay? Upon policy delivery, the producer may be required to obtain any of the following except, okay? Payment of premium, statement of good health, delivery receipt, signed waiver of premium. Okay, due to time, I'm gonna go ahead and select the answer. So you do not have to, if a person does not pay for their life insurance upfront, you may have to receive their premium payment, right? Because of the fact it says the producer may require the same, you know, the following, this is upon policy delivery. This means you're giving the policy to the client. It's been issued and all those things. And you might have to get a statement of good health, because if they didn't pay the premium ahead of time, you got to know that they still in good health, right? The payment locks them in on the application. And then a delivery receipt, well, we got to know that we got to get their signature to know that they actually received a policy, because some clients may be like, I ain't never get my policy. Well, your signature on this receipt, so you got it, right? A waiver of premium, y'all, is, and it's something you need to know for the test, if a person becomes disabled for 6 months or longer, there is no signed waiver of premium. Waiver of premium is just a rider that the company allows you to have, which states that if you're disabled for 6 months or longer, the company will refund you that 6 months of premium, okay? And you'll have free life insurance, so your insurance premium will be waived, so you'll have free insurance for as long as you are disabled. Yay, we passed, okay? And this is what I wanted to get some answer choices wrong, because I wanted you to see what happens on the end. On the end, they're going to give you the question, the correct answer, and the explanation, okay? So I'm excited because they give you an explanation and everything on the front end, but just in case you end up forgetting to screenshot the questions that you got wrong, throughout the thing, now you see them on the tail end, okay? With the question, correct answer, and the explanation. All righty. And so, boom, you are prepared for chapter 2. So now, guys, again, you can go back and you can go through the chapter again. Like I said, here are all those vocabulary. But as you can see, that portal number 2 is open because portal number 1. And so tomorrow, pretty sure we'll have one of you all to pull up your screen so that we can go through your chapter 2 to help you out the same way we helped this person out today. Super excited. We're going to make sure that you guys are going to the breakout room so that you can do chapter 1 on your own. Okay, guys, and report your scores in the Telegram group. Welcome again to licensing. Let's get this thing rocking and rolling and get you well on your way to success with this company. Let's make it happen.